Good morning, good afternoon, good evening. Welcome back to the Asia Finance Forum. This is session 4, and I hope many of you have been able to attend the previous sessions or listening to our keynote speakers. We are coming down to a very, very interesting session on the topic of financial access. So I'm very happy to actually introduce you to our moderator for that session. Her name is Karen Lane. She actually works for the ADB since 17 years. She's a former journalist, and she's currently working with the Asian Development Bank's Department of Communications, where she focuses on communicating ADB's various work on sustainable development in Asia. So she's very well prepared to guide you through the next 90 minutes. So she has 3 very interesting guests. We already had a chance to talk backstage. So looking forward to the session. Karen, the floor is yours.
Thank you very much, Jos. Thank you. You're right, indeed. We have 3 excellent guests, and you take us 2/3 of the way through the Asia Finance Forum, of course. I hope you, the audience, have found the sessions informative so far. I know I certainly have. Well, you will have seen the title of this session, Widening Financial Access to Help Vulnerable Households, Businesses, and Farmers Weather Climate Risks. Now, climate change is a reality. We're all noticing it. We're feeling it in changing temperatures, strange seasonalities, big weather of various kinds. But what else is indisputable is that poorer households, small businesses, small-scale farmers feel the impacts harder than most, both in their day-to-day, but also they find it tougher to get back on their feet after disasters, whether they're droughts, floods, heat waves, rising salinity, and so forth. So we come to the nexus between financial access and climate change. While low-income households, individuals, small firms are more susceptible to the impacts of a changing climate, they also have less access to the financial services and products that could help them to plan ahead or mitigate climate change or even recover when disaster strikes. So these could be savings products, so farmers or businesses have the funds to draw on in rough times, insurance, weather index insurance, for example, if crops fail, microloans to build better or more secure facilities or homes. On the services side, that could be peer-to-peer trading platforms to allow solar power to be shared or systems of e-money transfers and remittances. Now, our trio of experts today come from different organizations working in slightly different areas, but all working towards a common goal of more inclusive finance. And I know that they've got a whole lot to say about our headline topic today. So let me briefly introduce them to you alphabetically. They are Patrick Kanasingam, International Chief Operating Officer from Habitat for Humanity. Now, Habitat is a global non-profit housing organization. In his work there, Patrick oversees the operations in over 70 countries. He brings an extremely broad and deep perspective to our discussions today. We also have Natasha Jithanandani. Natasha is the co-founder and Chief Technology Officer at Chennai, India-based KaleidoFin, where she oversees the technology, data science, and product management team. So Natasha brings a real hands-on, deep tech-focused slant to our discussion. And also we have Eduardo Totolo. Eduardo is the Vice President of Research and Programs at the Center for Financial Inclusion. This is an international global think tank in Washington, D.C. He leads the center's work in financial consumer protection, responsible data practices, and green inclusive finance. So he's well versed in the myriad and very complex issues surrounding inclusive and green finance. I look forward to hearing from all of you, but just to say that we're also looking to hear from you, the audience. So after some initial thoughts and comments from our experts here, we will be throwing the floor open to you. You should see a question and answer box on your screen. This is the place to type in your questions, comments, as soon as you like, whether it's to a particular panelist if relevant. We want this to be a really lively discussion, so please don't hold back at all. So before we get to the Q&A section of today's events, I want to ask our esteemed panelists here a few questions to get the ball rolling. And I want to turn to you first, Eduardo, first of all, for your broadest overall view, Patrick on housing, and then Natasha with your very specific work in India, if I may. What I'd like to ask you about first is what new approaches you're seeing to help small firms, farmers, and low-income households build resilience, mitigate, and adapt to climate change impacts. Eduardo, can I come to you first?
Absolutely, and thank you for the introduction. It's great. It's a great pleasure being here. Well, let me say that when we think about innovative approaches to climate change impacts, like we have to take into account that the poorest half of the world's population only accounts for 10% of the global CO2 emissions. So their carbon footprints are, in a global context, they're very tiny. But at the same time, low-income communities are the hardest hit by climate-related disasters and environmental impacts. So we need to keep this into perspective. And as we think about new approaches, innovative approaches, I think we need to start by shifting our perspective on how we think about the space of financial inclusion and climate change and the intersection between the two. So that happens on many levels. And as you said, the Center for Financial Inclusion, we have prioritized this thematic as a priority for our work. And there are two main dimensions I want to talk about. I think the first is that a shift in perspective that we're trying to make as we think about this space from a macro level to a micro level perspective. What does that mean? When we talk about green finance, sustainable finance, and even during this conference, for very good reasons, we see that the emphasis is at the macro level. We ask very important, almost existential questions such as, how do we green the global financial system? How do we finance a great transition from carbon-intensive energy towards renewables? These are very, very important questions, obviously. But if we think from the perspective of inclusive finance, from the perspective of low-income consumers, low-income communities, these kind of questions, they do not have a direct relevance in their day-to-day lives. Obviously, they have an indirect, very important relevance. But if we think about inclusive finance, then we have to take the perspective of a low-income person, their day-to-day lives and challenges and risks that they face. So I think this leads to my second point here, which is we need to build that understanding. And I think that innovation starts from us understanding really when we take that discussion to a micro level, to the level of the vulnerable communities, then what are we really talking about? And at CFI, we have developed this framework which we're using to guide our thinking on what needs to be done, and how can innovation really happen. And we've developed 4 different pathways when we lead or when we get to this micro level, which is financial services can provide support through, for example, mitigation, that's one, resilience, adaptation, and transition. These are the 4 pillars which we think really need to guide innovation and the thinking about new financial services in this space. When we talk about mitigation, for example, this is investments in new, cleaner technologies that can help improve the local environmental conditions. For example, pay-as-you-go model for clean cook stoves or clean energy. These are fairly well-known examples. Resilience is an absolutely central pillar of this new space that we call green inclusive finance. And essentially, what we are trying to understand is how do we help low-income households and communities to reduce their vulnerability, first of all, and also build and increase their ability to respond to climate-related events. Then we have 2 other dimensions, which is adaptation and transition. Essentially, what happens with climate risks, we have a change in the livelihoods of low-income households or communities. And so they need to either adapt their lifestyles and build the ability to respond to these new risks, like learning new skills, for example, or learning new ways to create an income. But in some cases, when the effects of climate change are catastrophic, then what we need to do is help households build a transition to a completely new livelihood. And financial services have a very important role to play, and new innovative ways to think about it and to design products really need to help also in this level of transition. I have to say that at the current stage, we see among these 4 main areas, we see resilience and adaptation as the key, the most urgent ones where we need very much of our focus, as well as focus of the industry and governments. But obviously, also the others are incredibly important. And let me also add maybe one more point, which is that as we think about vulnerable communities that are affected by climate change, we tend to think about smallholder farmers as the archetype of the type of community or the type of profile that are most affected, which is very true. And that I have to say, we spend a lot of time within CFI to think about what are effective solutions in that case. But as we think about the first order, second order, third order effects of climate change, and we see that actually there are many different segments of the low-income communities that are affected. For example, coastal and river communities, for example, the urban poor who need transition or need support to face, for example, heat waves or rising temperatures, water availability. So I think that's another element in which, as we think about this new space, or it's not really a new space, but a space that is getting increasing attention of green inclusive finance, these are some of the points I think that can lead our innovative thinking.
Yeah, absolutely. I think you make some good points there. I mean, firstly, that it's a bit of a continuum, isn't it? From, as you say, from the prevention, the mitigation, resilience, adaptation, transition. As you rightly said, Asia and Pacific households, particularly those low-income households, they're not the households who have been responsible for these climate change emissions and so forth. But I think you also make a very good point that, again, very different communities are different people have different needs. So Patrick, can I come to you perhaps on the housing side of things? What are we seeing to help people better prepare for what we're seeing on the changing climate? Home is where the heart is, after all, right?
Absolutely. Thanks, Karen. Again, a good morning, good afternoon to everyone. Karen, if I may just take about 90 seconds to maybe also provide some perspective before I directly respond to your question.
Please do.
I believe that we are dealing with the twin problems of capital and capacity. And these are the biggest challenges, particularly as it pertains to MSMEs. What do I mean by this? Think of capital. It's really the single biggest problem that MSMEs face when it comes to growth and impact. So I'm referring to micro, small, and medium enterprises. If you look at the supply side of capital, oftentimes the products that we have at our disposal are off the shelf. I would be bold enough to say that there are very few products that are very much client-centric or people-centric, and I'm talking about the most vulnerable populations that are impacted, particularly by climate. And that's a big challenge for us. Now, in fairness, I think there is a related problem, and that's the capacity aspect that several financial institutions face when it comes to designing products that actually could have a positive impact as far as the clientele is concerned. And again, I'm referring to vulnerable populations. These are the two findings that actually helped Habitat come up with the microbill fund. It's a 100 million wholesale fund for microfinance institutions. And I'll talk a little bit about microbill a little later on, but I just wanted to give this perspective that even after 10 years of establishing the microbill fund, it really seems, at least as far as we are concerned, that the foundational challenge, irrespective of the sector, remains the same when it comes to financing or inclusive financing. So that's a problem that I want to call out. Coming back to your specific question, Habitat for Humanity International, we recognize that vulnerable populations are bearing the brunt of our changing climate. I know I'm stating the obvious, but it's got to be stated anyways. Across the quickly urbanizing global south, including Asia, and we know the numbers are staggering, the number of people living in hazardous locations and inadequately built housing is expected to more than double, believe it or not, to 3 billion over the next 15 years. That's a gigantic number and a huge problem to deal with. The building sector has a particular opportunity to reduce its carbon footprint, as it alone counts directly or indirectly for about 35% of global energy-related emissions. So what are we doing? Habitat for Humanity International is advocating for climate smart solutions in two critical ways. Again, like I said before, putting people at the center of our design work, and that's important for us. And that what that really helps us to do is to mitigate some of the carbon emission efforts for built environment, so that we don't drive up the cost for household, which may rather actually expand the deficit even further. The second is the adaptation that protects communities, businesses, and households. So again, taking this inclusive approach when it comes to addressing the challenges faced by the most vulnerable. The final piece I just want to say here, Karen, is while the climate change challenges are not new and continue to grow, the tools available today equips us all to better respond to the problem. And that's important to call out, because we just cannot be focused on the problems alone. We also need to continue to innovate as far as the tools are concerned, where data and technology can provide the maximum leverage. However, I think I need to also call out, this also requires the public and the private sector more than ever to come together. If you look at the value chain, together and ensure that solutions designed are built on the foundations of client centricity, like I said before, and that one size may not fit all. Thanks.
Thank you, Patrick. I mean, you make an excellent point. It's a phenomenally huge problem, isn't it? 3 billion people. I want to repeat that number, actually, because it was astounding to me. I read on your website that the figure now is 800 million in Asia and the Pacific don't have decent homes, if I'm not mistaken. But you said that 3 billion, we're looking at 3 billion people without good homes. I mean, that is a sobering thought, isn't it? Very, very sobering. But you also made the point, I think, about being people-centered in our approaches. And I think, Natasha, that's where I'd like to come to you, because Kaleidofin's working really hard to provide financial products for people on their own terms, aren't you? So in ways that suit them. What sort of approaches are you seeing at Kaleidofin, or indeed elsewhere, that is, enabling people to, get the products that they need to be more resilient, to mitigate, to adapt? We can't hear you, Natasha, I'm afraid. If you can just take off your mute, that would be great.
Yes, sorry about that.
Thank you.
Thanks, Karen. And there's so much here that I relate to. And as you mentioned, right, at Kaleidofin, our focus is really on how do we enable each individual now to become more resilient and bring, the thoughts of financial health and financial resilience to the front and center. But what we also really believe in is that these solutions need to be intuitive. They need to be easy to understand. They need to be convenient, because the customer segments that we're talking about, not only are they affected so deeply by these shocks, but their daily lives as well are really difficult. They're very often on farms or daily wage earners where, even taking a bit of time off is not an option. They may not have a family or community system that educates them also on the options available to them that would make them financially resilient. So our approach is very much to bring this to become really intuitive. We talk to customers about their goals, and we very often take a goal-based solution approach where we tie it to their real life aspirations, right? And that aspiration could be sending their child to college. That aspiration could be buying a two-wheeler in the house. That aspiration could be purchasing the 2 cows that will allow them to move to the next stage of income generation. And we then design and deliver solutions end to end that meet those goals. So we work with the customer. We also, within the solution, make it really simple. So the solution very often encompasses savings, which customers relate to deeply, especially because they're, in good times, they are keen to save, they are keen to grow their financial abilities. But what we do, which is, I think, interesting, especially in the context of this discussion, is that we also build in other aspects into the solution, including insurance to meet certain shocks. We tie the insurance to the goal amount that they're saving towards, so that it's very intuitive again for them to understand, what, in case of an adverse event, what would be available to them. And I think the other very interesting aspect we've tried to build in that I think is different from most solutions, at least we've observed, is that we build in access to emergency credit, again with the very, very strong intention that if an adverse event like a climate shock or other shocks as well happen, that they should be able to access credit in an easy to access and well-priced way, because this is what we really, we've seen so much research on the ground now through papers and through user research we've done ourselves, which indicates that these are the shocks that really take families through a journey that is very hard to recover from. So I think the innovation is really on one big part, as I mentioned, is how do you make it an all-inclusive solution. The way we deliver it is also, we really personalize the recommendations we make to each customer. We have a machine learning based engine that runs in the back end that takes into account a ton of data about these customers, whatever we know, right? In some cases, we know about their past borrowing history. In some cases, we don't. And then we're treating it as a relatively new customer. And that allows us to take the guesswork out of the equation and really allow it to be delivered to the customer. And I think the last thing we've done that really, again, there's many more, but the last thing I want to mention right now is towards the convenience. Very often, even though there is so much intention and desire from customers to build towards resilience, they don't have the time, they don't have the knowledge to do so. And so what we've invested in very deeply is to reach these customers very often through partners who are on the ground. And we take a tech and touch approach where the first interaction may be through a person that they know and trust, but onboarding will be digital, assisted if necessary, digital by the customer if they're in a position to do so. But really taking that to the customer at a place and a time that is convenient to them makes all the difference. And it's, what our focus then is, how do we start there? And then we work on customer journeys to then interact with their customer through other means, so that they can continue to observe their solutions, how they're growing, what kind of access they provide. And that requires training and awareness building. But I feel like this, these sort of core principles of solution-based approach, convenience, and intuitiveness in the solution design really makes the difference.
Absolutely. And we're back to that client centricity aspect, right, that Patrick mentioned earlier. Absolutely imperative to get the right products, but also to get them to people in the right way, the right place, in the right time, right? It's no point just having the product there and then expecting people to come to you. Doesn't always happen, I guess. And I was also interested in what you were talking about, bundling products, Natasha. So I'd like to come back to you on that in a bit, if I may, because I want to sort of move on to about restoring and recovering from the effects of climate change and how inclusive finance can help in this regard. Patrick, how do you see this aspect of inclusive finance? And I'll come to you, Eduardo, and then back to Natasha, if I may.
Yeah, thanks, Karen. And I appreciate the fact that you're continuing to underscore the importance of taking a people-centric approach, and I want to really build on that point. As far as Habitat for Humanity International is concerned, we aim for people to thrive by living, obviously, with dignity. Security is another big piece, and resilience, of course. And there are two related points here, Karen, that I would like to talk about. One is about what Habitat has done over the past couple of years, focusing on a program theory of change. Again, taking a very people-centric approach, and that includes putting people at the core and center of our program design. And what that's enabled us to do is to focus on 4 foundational programmatic priorities: affordability, tenure and security, habitability, and basic services. And that's our program framework in essence. Access to finance may not be the only solution, but certainly I think it's fair to say it's an important tool to reduce, prevent, prepare, and respond to the effects of climate change. Think about it in the context of housing. Low-income households generally live in very poor housing conditions, making them further vulnerable to the extreme weather conditions. On a global scale, an estimated 85% of low-income homeowners build what we call bit by bit, as they really have, based on the resources that they have. But a quality home requires many elements working together: adequate construction, materials, skilled labor, a sturdy roof, proper design. I was in El Salvador just a couple of weeks ago, and interesting, I was talking to my colleagues, visited a newly built home, and they kept emphasizing the roof, the importance of a sturdy roof, something that we take for granted in many parts of the world. But I thought that was interesting. Proper design to ensure, natural lighting and ventilation, water and sanitation facilities, as well as renewable efficient use of energy, all of which, they're good, but guess what? It comes with a cost. So each actor and beneficiary or partner in the housing value chain has its unique financial needs, ranging from the low-income family to the small businesses from whom they buy construction material, to trucks and transport vehicles that transport raw materials. So this context makes the definition of financial inclusiveness much deeper and diverse. And in essence, what that means is that we, from a Habitat for Humanity standpoint, will continue to look at that value chain in a more holistic way. Housing is much more than just an asset. For some, it's a place to sleep, while others, it's a place where they earn income. In addition, I think it's fair to say, to meeting the fundamental need for safety and security, the physical infrastructure also adds to the financial health of the family. And this, we have sufficient evidence to say that's the case. And thus, the greater the energy efficiency, the more disposable income available to these low-income families. However, it's just not about focusing on the family, but also about how we make the housing value chain resilient to climate-related risk, to strengthen efficiency and increase accessibility to greener, smarter products and services. If I may just give one quick example, Karen, for instance, the Philippines, in the archipelago, over 7,000 islands situated, on the Pacific Ring of Fire, is one of the most natural disaster-prone countries globally. At the same time, it is particularly impacted by the effects of climate change. In November 2013, as we know, Typhoon Haiyan, known as super typhoon in the Philippines, devastated parts of the country, killing, I think, it's at least 6,300 people, and leaving thousands more struggling to recover, especially in terms of housing. Our research in the area suggests that almost all homeowners aspire to improve their homes, but are constrained, guess what, again, by the lack of funds.
Yeah, absolutely. I think if there's one thing we've learned over the last few years, it's that we ignore the supply chains at our peril, right? Whether it's for our new iPhones, or whether it's for housing, obviously a much more important subject. And as you rightly say, I said earlier, home is where the heart is, but I think you alluded to it earlier that houses can also be centers for income generation. Also, a good quality home means positive health, positive attitudes, or oftentimes supporting good education outcomes as well. So more than just a home, right? More than just a roof over your head. Eduardo, back to you. I'd like to hear your perspective on how inclusive finance can help in the aspect of recovering and restoring livelihoods after big climatic events. And you pointed to the 4 areas that the CFI, the aspects of your work there.
Yeah, no, thank you. It's a great question, and also I really appreciate the points that Patrick and Natasha have made. I think really our ability to build the capacity of households to respond to such crises, I think it starts with our understanding of how do we segment the different types of risks that are linked to climate change. Essentially, that's a basic question, really. But if you think about it, we're talking here about a very complex system that includes all types of risks. If you think climate risk can be immediate, it can be like hurricanes or floods, which need a certain type of intervention. They can be seasonal, like drought, or they can be gradual, climate risk, like sea level rise or soil salinization. And the responses that the financial sector providers need to provide need to be designed in different ways based on the types of risk. And so, yeah, unfortunately, we have to deal with a highly complex system, and it's difficult to have a single answer to a complex phenomenon like the one we're discussing here. And to make things even worse, maybe, and sorry to do that, but the ones I mentioned now are more the direct risk of climate change. But what about the second order, third order, indirect risks, like, for example, when climate change leads to constrained resources, or to Patrick's point, to your point, Karen, to disrupted supply chains for food supply chains, for example, or supply chains for healthcare, medicines, and so on. Each of these present a tremendous, formidable challenge, and I believe that the private sector can play a role, but also, as we mentioned earlier in the panel, I think that it cannot be the private sector alone to provide a solution to all of these problems. But let me just say that think about the private sector. What is the limitation that they have? It's a very simple one. When we talk about risks, we say that climate change causes covariant risk, meaning that they affect a lot of people at the same time. And so it's very difficult for commercial solutions to really come up with direct solutions to these type of problems, covariant types of risks. And whereas we're seeing very effective solutions when it comes to the opposite of covariant, which is what we call idiosyncratic risk, that affect individual households within a community, but it doesn't affect large number of people at the same time. So the actuarial modeling in this case is something that we've learned and where there's data available. But when it comes to the climate change related risks, then we have some problems, which is we don't have enough data. These types of risks tend to be unpredictable. So we still haven't built the capacity, the private sector has not yet built the capacity to address some of these risks. Although innovation has happened, and we've seen some of that, and part of that is also part in this panel. But I think the core point that is important for us as a community to understand is that the solution in the short term, mid-term, and I believe also in the long term will come from the establishment of very strong collaboration between the private sector and the public sector. I doubt that the private sector alone will be able to affect all these different types of risks in a way that is efficient. I think that the governments, through different types of programs, such as social protection programs, disaster risk reduction, other types of financing, will play a foundational role in identifying a solution. But having said that, it's important to say that it's not that the private sector has nothing else to do. A lot of innovation still needs to happen. We have seen some of it, but the scalability of the solution is still limited at this stage. I think that the innovation potential in the private sector is still very large, and it still should be an area of focus for organizations like the ones that are represented here at the table today, for research. That's something that Center for Financial Inclusion is specialized on, but also for governments and for donors as well. It's an area that has tremendous potential. So I think that it's important to think these two things. On the one hand, public sector has absolutely to play a role. On the other hand, private sector still has a very great potential to lead to new innovations and scale those innovations that have been tested and that are being successful right now. I think that is the center of where we should be thinking when we segment the risk and think about the solutions for these different types of risks.
Yeah, no, absolutely. And I think actually that private sector role in these financial solutions, I think, was one of a subject of one of the earlier sessions in the Asia Finance Forum. So for the audience out there, if you didn't watch that, I think that's very much worth watching to Eduardo's point. But to come over to you, Natasha, because you are the private sector, you are trying to find these solutions. And I was interested in what you mentioned earlier about this bundling of products. So having this insurance product alongside the savings product so that, a disaster doesn't knock somebody completely for six, push them back below that, the poverty line or deeper into poverty. But so interested to hear about, how that works, but also, if you have some comments about the scalability that Eduardo mentioned as being so important.
No, absolutely. I think, we, just to speak to the point you mentioned, right? Like, I think bringing insurance in a bundled way to the customer, the big advantage is that they don't have to think about it separately, right? There's not a dissonance there. I think even I find it difficult to track and buy and maintain the right kind of insurance, and to expect all customers in this segment to do that effectively, I think is just very difficult. And I think we are seeing the connect also that customers have when they hear that this is bundled into the solution. They really understand it, they appreciate it. And the way we look at it is really as, really building the solution to provide them what they need. So bundling a certain basic level, but then providing additional insurance policies depending on whether a family wants to focus on, say, flood insurance because of the area that they are aware they live in, or health insurance, right, to give a different example, which may not be climate change related but very relevant. And I think, we find that's very useful. I think another thing really struck me, right? So in addition to providing the products that protect the customer and really allow them to have this fallback, I think towards the research aspect that Eduardo was referring to, right? I think the other thing we've really done a fair amount of work on in a couple of different ways is to have our data science team actually has worked on a variety of models on a couple of fronts. So one is, of course, really to understand the impact of climate shock on different communities, and we had done this work actually even collaborating with certain external agencies which had a much broader set of data, which really allowed us to look at, designs and differences in delivering in an intuitive way, but bundling natural catastrophe related insurance where necessary, and also using the data modeling to be able to bring this at a pricing that would be affordable for customers, right? I think sometimes that's the issue, right? It's really too expensive when it's finally delivered to the customer. I think the other thing we've really done, which I feel our data science team has helped us shine so much light on, is to understand the impact of any economic stress condition on different types of customers, and help us identify what are the households that can react well to economic stress conditions and what are households that don't. And that translates to both climate related shocks, but it also translates to other kinds of shocks like the pandemic, like demonetization, which happened in India. And we've been able to, because also in the recent years, I feel like, unfortunately, the frequency of shocks has really gone up. And so the data sets we have available really allow us to have the models predict the differences in the households that have some resilience versus not. And that's a very interesting world as well, because you can really then design credit products and also decide loan amounts or credit amounts. I'm moving from insurance to credit, but I do believe that credit is another way of helping families address these shocks, right? I think it's sort of two sides to a coin, and families need both. And I think a third side is, of course, savings. But I think this has also allowed us to then evolve from there and help both work on really different types of emergency credit products that can be made available to customers and really be able to understand what will be the sizing of those products, what could be the pricing that we could plan out ahead of time. So I think these also just the research-based data modeling-driven work has really helped us even beyond the solutions-based approach.
Absolutely. Thanks very much, Natasha. I'm starting to see some questions come in, but I just want to ask each of you one last quick question, if I could, before we go to the Q&A proper. Eduardo, if I can come back to you. CFI, your organization, has documented the really important role that financial services can play. Can you share some specific examples, particularly anything that would be relevant to Asia and the Pacific? We heard just yesterday about the very, very specific needs of the Pacific Island region, for example.
Yes, so I think that there's definitely several cases where innovation is leading the way. Some that we've been following as Center for Financial Inclusion, as well as the broader Axion family, for example, is this company that's operating primarily in Africa, but also in Asia. It's called Pula, and it provides area yield insurance using high-tech solutions, and has really helped a lot of farmers deal with risks, as well as build the capacity and the resilience to face upcoming vulnerabilities and shocks related to climate. I think that the point is, and I want to speak to some of the discussion that we just had, is the fact that in many cases, the financial services that we see that are provided the financial sector do not need to be specifically designed for climate risks. In some cases, like the access to generic financial services, such as reliable savings products, reliable and affordable, to Natasha's points, remittance products, for example, they can be very, very effective at dealing with some of the risks that are caused by climate change, but also by other causes as well. So I think as we think about products, we do not necessarily need to go and follow the new technology, the new startup necessarily, because some of these already exist and just they need to be thought, because we need to think about the different ways in which they may be used in the context of climate change. And just as a very basic example, we're seeing how mobile money is helping households deal with shocks and stresses of different sorts. Kenya is an example that we heard so many times, and M-Pesa, the very widespread mobile money solution in Nairobi and in Kenya generally, is being used by households facing risks, facing any type of shocks. More specifically, if you want to talk about the climate-related disasters, we're seeing in Mozambique, in Africa again, but as well in several Asian countries affected by floods, for example, we see their households that are affected really increasing their use of mobile money. Why? Because they're tapping into their own social networks. And people, that friends and family, are helping them just face the immediate aftermath of a shock. And that's a very simple way in which we can build resilience. We don't need to have something specifically designed for climate change. So I think that some of the off-the-shelf solutions are fine, but there are limitations to that as well. I think there are other products, whereas where having some design principle that is more thought and focused on climate types of risk is very important. For example, I think on the credit side, that's a product, a financial product that needs to be tweaked, needs to be designed with some of the climate change risks in mind. And I think that was Natasha's point. I think it can help if we design it the right way. It can help poor households, low-income households, to invest in, for example, risk reduction measures like irrigation or more resilient seed varieties, or transition to new livelihoods when necessary. So some of the credit products, I think, needs to be more in tune with the specific risk and specific needs of climate change. The same we can say for insurance, and the same we can say for some government programs. Traditional government programs, G2P payments, tend to be too slow and to be implemented when there's an imminent or when there's a shock that is really affecting a lot of households. How do you design the targeting and the delivery of the social payments? It just takes too long. And so I think that we need to adapt the social payments to specific contexts of climate risk, which have their own specificities. And so in this context, I think some adaptation to just to go back to the same word, but to the specificities of climate change will be very important.
Yeah, absolutely. Know your customer, right? Different context, but know your customer and your customer's needs. Patrick, just very, very quickly, because I'm monopolizing the time of our esteemed panelists here, and I do want to get to some of the questions, but I wanted to ask you about potentially some lessons learned. Now, you've been working with ADB, you teamed up with them fairly recently, Habitat teamed up with them to deliver some housing loans to low-income families in rural, peri-urban areas in, I think, 4 countries. Bangladesh, Indonesia, India, Philippines, if I'm not mistaken. Anything in particular that you learned from that joint effort that perhaps might enable us to scale up some of these efforts?
Yeah, thanks, Karen. Is it okay if I'll definitely respond to your question. Can I just build on a salient point that Natasha touched on, because it might be pertinent to this conversation,
Please do.
It doesn't directly, relate to the climate resilience. One of the things that, and this is a lesson that we are beginning to learn, and we're still asking the question what it means for us from a housing standpoint, Karen. And that's to do with shocks and stressors that we haven't talked about today. And it's not necessarily directly related to climate, but it's the war in Ukraine as well as COVID recovery. And what our learning thus far has been that policymakers, including international aid agencies, have competing priorities at this point. So every time we bring up climate, for example, while it's still a priority, they are also dealing with the twin problems that I just mentioned. And I just want us to bear that in mind, because for us, from a housing standpoint, we talked about the supply chain and disruption to the supply chain. But this is also having a direct bearing for us as well. And I think we cannot ignore what this really means, even as we continue to hone in on climate resilience, if that makes sense.
Yeah, absolutely. Nothing is isolated, right?
That's right. And we are all competing for the same resources as well, right? So that's the other piece that we need to bear in mind. The partnership with ADB, it's both a unique one. You mentioned it yourself in terms of the numbers, looking at the 800 million people in Asia Pacific living in informal settlements. The fact that we were able to partner with the ADB in making sure that we can actually come up with, actually has given us a platform, I would say. It's a model platform for us to build on. There are some lessons that we're still beginning to learn. And I think, we're hoping it's the kind of initiative that we could potentially replicate. But if I may just make use of this opportunity to give other examples as well, Karen, if it's okay, to the question that you posed to Eduardo, looking at some of the related aspects around, products, solutions, etc. If I can give you 3 concrete examples. In India, Habitat is supporting a company called ModRoof. It's an eco-friendly roofing solution that is, greener and more durable than what we would consider typical asbestos or tin sheet used by low-income families. In Kenya, Habitat has partnered with Britam, a market leader in insurance, to pilot test a property insurance initiative to help small business owners against risk from fire and flood. Majority of these small businesses are operated from houses, a common trend that we are seeing across Asia. And the last piece, of course, the last example that I want to talk about is the Microbill Global Fund that provides debt financing to microfinance institutes, so MFIs, and has assisted multiple MFIs to launch, again, housing improvement solutions where energy efficiency and climate adaptation are part of the product design. And in summary, just closing the loop on all this is to say, to your point, we can't look at the issues that we're trying to address in a vacuum because the world is rapidly changing, would continue to change. We are going to deal with more stresses and shocks that would compete with the climate solutions that we are seeking at this point. And as looking at that whole value chain, it's important for us to ask questions to say, when we are confronted with these competing priorities, what would our resolve be, particularly when we look at climate resilience? Can we continue to stay focused, knowing very well that we are competing for scarce resources as we look for durable solutions? Thank you.
Yeah, thanks very much for that. Just to say that I'm afraid we seem to have lost Natasha very, very temporarily, we hope. But I do want to, I'll get back to her when we reconnect with her. In the meantime, I'd like to move to some of the discussions from questions.
Karen, I'm actually here. I logged back in, so just letting you know, yeah. Oh, I think my network went down, but switched over to a mobile hotspots, yeah.
Excellent. The nimbleness of the tech solution. So can I come to you, Natasha, then, please? Just because, I think we often focus on credit and savings when we talk about services, but especially for those people at the base of the pyramid, wealth management services are also really critical, aren't they? Can you talk a little bit about what Kaleidofin is doing and perhaps the sort of things that Kaleidofin is doing in this area that could be replicated by others?
Absolutely. I mean, I think, again, just going to the core of what we feel with that same bundle solution-based approach, we feel that the base of the pyramid, this customer segment, should be able to grow their wealth just like anyone else would want to. And we find that there's a real, eagerness among customers that we work with to do so. There is also the ability and the inclination to save. And so our approach here is highly data-driven, to be honest. We do a lot of work to evaluate various financial solutions available in the market. We take into account very, very seriously the kind of risk behind these products, because most of the customers we work with are in the underbanked segment. And we're talking, the target market segment here is over 500 million customers. We, of course, are working with a small set of them, but looking to grow that. But the risk-taking capability here is much lower. And so the wealth management products we pick, one of the key things we do is look very carefully at the risk profile of these products, what kind of history do they have, really avoid highly volatile products, and very much match the risk that the customer can take to the kind of products that we recommend. And this is all done, using technology, using models in the back end. And I think that really makes it much easier, because traditionally, very often an agent in the front end, a relationship manager, somebody who's working with the customer, is the one who's taking a decision or recommending certain products. And we feel like that use of technology really helps by pushing that to a data-driven setup in a backend that can then match the customer to the best solution for them. And I think that's one very useful thing. I think the other thing we really believe in from a wealth management perspective is just to design the product to build in flexibility. Many of the wealth management solutions we have, if you look at a recurring deposit in a bank, if you look at a mutual fund that has a monthly installment, very often traditional financial products expect that you'll be doing this monthly and expect that the affordability is there. And so it's not that I think financial providers are not looking to design these well, it's that they don't realize that this segment actually can have very volatile income, complete seasonality, in income as well. And so what we do is we really build in that flexibility, and we enable these products to be built in a way that you save when you can. And so you're growing your wealth at the pace that you can. And we tie that in with definitely nudges into saving more regularly. We also look in a very strong way at customer engagement. How do we bring the customer herself or the household, if the customer doesn't have a smartphone? Because again, the digital divide between smartphone ownership between women and men is shocking, right? It's upwards of 30% of a gap between men and women. And so how do we bring the household, if needed, into a digital connect with us, either via the app or via vernacular phone calls, but allow them to understand the value of this wealth management, the ability, what they have saved towards, what is their now capacity to reach their goals. As I mentioned earlier, we do this in a goal-based way. Everything is anchored around a goal. And so I feel like that combination of things is really something I would recommend, right? Like using data-driven tech to find the right solution, finding a way to build trust for the customer, finding a way to encourage regularity but allow flexibility, finding a way to transition the customer from a lower frequency interaction to a much higher frequency digital interaction enabled by tech. I think these are all things that many of us can build out. We ourselves are learning a lot on the ground. We are evolving our solutions constantly to enable even more convenience. So I think it's a long journey for us, but I would recommend at least these things.
Yeah, absolutely. It's a journey. And we're glad that you're joining us back on our journey today, Natasha. We're glad to have you back. I do want to get to the questions, and we've got a lot coming in. So I'm going to ask you to be very, very brief. Not because I know you have a lot to say, but I do want to get to as many as we possibly can, so that we can really spread the information, spread the love. And I'll come straight back to you, Natasha, to sort of tap back into what you were saying about technology. But I would ask Patrick, Eduardo, please jump in at any time. Very, very happy for the politeness to go completely out the window. This is about technology, and it's from Kelly. She asks, how important is technology in achieving green inclusive finance in your respective market segments? Or are there any costs to focusing too much on innovative technology, perhaps like losing client focus? Perhaps, Natasha, we can start with you. Eduardo, Patrick, please jump in.
I think this goes to the core of what I was saying. Yes, I mean, I'm biased, right? I come from an entirely technology background, so I completely believe there's a value in using technology. But I do believe that, the more you can do it in the back end of these systems, the more you can use data to really understand what is the right solution, identify who are the customers that need what. First of all, I think that greatly simplifies in what you're trying to deliver. So I think a lot of the technology innovation that we should do should be in that space. AI and machine learning has given us a ton of tools that allow us to do this. And if we can leverage the kind of data that we have in the appropriate ways, and we've seen this enable us to give access to over 1 million customers now to appropriate credit products through our partners, and significant quantities as well. And I think that same approach can be applied to any financial product, and we've seen this also in the wealth management recommendations. I do agree with her concern as well that too much tech at the front end can just make these products not accessible to certain customers. And I think sometimes, in India, not only in India, I'm sure this is applicable across the world, most fintechs approach things, digital first, digital only. And I think we have noticed that that would preclude a lot of our customers. And so we are also digital first, but we very strongly believe in supporting a direct to customer as well as an assisted model. And that allows us to work with folks who are partner with many folks who are able to already on the ground meeting these customers at scale, and we can provide the tech to them to go out to these customers and provide the same access to what a customer would do directly. And I feel that providing these two models in the front end is not difficult, because you can leverage the entire tech that you build in the back end in exactly the same way. So it's a great reuse. I think it also builds a ton of trust among customers to deliver it that way. Also do believe very strongly, though, that those customers do need to slowly be transitioned to ways to interact with you, to be able to grow their access to financial products over time, because it's really a journey in the lifetime of the customer. I think sometimes you don't want to stop at the first interaction. So I think investment in that customer engagement is super critical as well.
Yeah, thanks. Absolutely. Trust is important there. Eduardo, Patrick, anything to quickly add?
So, Karen, if I may, let me say this. This is Natasha's domain. So I wouldn't have anything really meaningful to say other than to make a comment. And Natasha is spot on. I mean, the term we use from a housing lens is impact at scale. We talked about numbers, right, at the beginning. We talked about the region. We talked about 800 million. Globally, we said, 1.6 to 1.8 billion people impacted by the housing deficit. And the numbers, like I said before, next 15 years could be as high as 3 billion. Technology or technology innovation has to be a key enabler. But this is what I want to say. Habitat is not the leader here when it comes to technology. And this kind of underscores my earlier point. When you look at the housing value chain, is we need all of us. And, when we look at the housing ecosystem, for example, we say, there are things that Habitat can do. There are things that Habitat cannot do and shouldn't be doing, quite frankly. And that's why I would say partnerships would be so meaningful when we look at this from a holistic lens. Thanks.
Yeah, thanks very much. Eduardo, want to jump in?
Absolutely. Yeah, no, these are great points. And I have to say, I just want to echo what Patrick said and also what Natasha said. And I think we have to be realistic here. What can financial services really do in the big picture of things? And we have to be realistic. It can definitely play a role, an important role, but it's not going to be the only solution that is going to change and provide all the solutions to the problems that we need. So I think that's a very important point, and I'm glad that Patrick brought it up, because I think it's essential for us as we speak about this and we speak about the importance of this. Also, we put an accent and highlight the fact that partnerships between, say, finance-focused organizations and non-finance focused organizations is absolutely essential at this stage. So I think that's a great point. When it comes to specifically to the question on technology, I don't know if I'm the most expert, definitely not in this panel, but I think that we can talk about technology, but I would talk more broadly about innovation. And innovation can happen definitely through technology. But I think what's also very important when we want to target lower income communities is business model innovation. So how do we develop the delivery models that then get a product or a service to a low income household in a remote village in a way that is affordable? And I think that is the element that I think is incredibly important. That can happen through technology, that's true, but it can also happen through other ways. We've seen, agency models, for example, being very successful in some cases, right, not in all cases. So I think that's the combination of the two is where we should be focusing on.
Yeah, absolutely. Well, it sort of leads into our next question from Amit. He's making the point about the Pacific Island markets, which we mentioned earlier, have a very, very specific needs. He makes the point, though, that the Pacific Island countries, the markets are very small, narrow, and financial products might not reach that break-even point for financial providers. He's asking if you see any feasible private sector responses for these very, very small markets. perhaps technology? Who would like to jump in there? Eduardo, I see
maybe,
you.
Since I'm on board, but it's an incredibly important question here. And I think that when it comes to smaller economies, obviously they require specific solutions. I think that perhaps what we can say is that when it's difficult to scale, there's a problem of scale, and the markets on their own are too small. That's where we have to think about solutions that involve maybe multiple countries. I see, for example, in the Caribbeans, like a multi-country, multi-risk solution that uses parametric insurance for a catastrophe risk insurance, basically. And this is, I think, a solution that we can explore now. That whether it's directly usable in the context of the Pacific, obviously, is a broader conversation that we're not going to be able to get into the details right now. But I think that when we face a problem of economies or a problem of scale, then I think taking a broader perspective is the way to go. So I think that's the conversation that I think will be good to initiate and see also from these examples. I think that from the Caribbean, I will start from looking at that solution and seeing to what extent it's replicable, if at all.
Right. Yeah, pooling perhaps. Patrick, Natasha, your market is massive, right, compared to the Pacific. But be interesting to hear either from your perspective or Patrick's if there's anything you see could be applicable there.
Karen, can I maybe, it's a great point, right? How do you incentivize, particularly whether it's the private sector, financial institutions, particularly in small markets? If I may just reflect on some lessons that we are still learning from our microbill fund. Microbill provided a really demonstrative model for other investors to look at housing from both the lens of profitability, but also social impact as well. And I think the key here is how do you bring the two together? The private sector has to be incentivized as far as profitability is concerned. And then, of course, there's the concept of social impact. For us, the demand for urban housing in Asia remains largely unmet. Giving the private sector a critical opportunity to deliver affordable materials, construction, access to energy, and also, based on issues that, impacts all of us, like gender equity, water supplies, sanitation services, etc., I think would be a good model for us, even as we focus on and ask questions like, how can we create an enabling environment for us, of course, in this instance, to be MFIs through risk sharing and capacity building, helping them, unlock local private sector capital for housing. So that's just one example. It's not the only example, but that's just one example to reflect on.
Natasha.
I can't say I have too much more to add. I think, I would say one thing, a lot of the concepts and the fundamentals apply globally here. And I think the learnings translate very well. We have looked at so many other financial products that have been successful in Africa and Asia to inspire us as well to, evolve our products. So I would say that what can really, I think, enable smaller countries is if the regulatory environment, the compliances that are required, if there is an environment that encourages the kind of partnerships that I think Patrick's also referring to, that could be really interesting. I think some of the components here that could be part of the solution are actually something that could also be leveraged across countries. So, for example, scoring models, I think actually could have an interesting translation if built at scale in one place but applied in another, because I think there are ways to understand similarities between geographies and dissimilarities. So I feel like there are components here that could actually be we could partner to reuse them. And I think then for each country to enable the kind of setup and partnerships that allow these things to be done faster, because that's what I think would usually preclude, the private sector from maybe coming in otherwise.
Can I ask you just a follow-up to that, actually, Natasha, or to the rest of the panel, actually? I mean, do you see value perhaps in pooling between countries that are different, simply because they are different? They have different climate risks, potentially, different levels of income levels, for example. Is there a sense in doing that in order to be able to provide these inclusive finance products to perhaps the smaller markets that might otherwise not be able to stand on their own?
Maybe I'll go first, and I'm sure Patrick and Eduardo can add a lot more here. I definitely believe there could be some very interesting usage here of, especially models that predict risk in different climate conditions for different kinds of customers. And I feel India is a great example of this, right? It's a massive country. I think different parts of the country face very different types of climate risks, right? We currently have floods going on in East India, and the daily news is reflecting this, and other parts of the country are just running as usual. And I think we have the same challenge when building out data-driven models for our own purposes just within India. It's not a one-size-fits-all, and we're doing a lot of work right now to build clustering within these models, sub-models that can predict risk for different subsegments. We employ a lot of tree-based approaches here to really start drilling down, not at a very basic level, because I think us, just a human approach can only maybe factor in 5 to 10 variables at a time, but a model can really look at 200 variables at a time and really start differentiating. So I think the same concept very much scales up, right? I think if there's enough similarity in neighboring countries, data that's available at scale, I think there could be a lot that could be leveraged.
Yeah, thanks very much. Thanks. We have another question come in, and it's specifically for you, Eduardo, though I'm sure other people have their views as well. The question is asking you to indicate which Asian country has the better or best business model in terms of green financial inclusion that could be sort of perhaps a role model for other countries where there are low-income households or smaller enterprises.
It's a great question, and I don't think I'm not aware of any ranking that has been done at this stage. So we can only talk.
Perhaps not, but perhaps you can give us some examples where you think there are things are working well, perhaps.
Sure, I think there's some business models that seem to be quite effective and innovative, and I think that could be replicated in other markets as well. I think, in particular, we're talking earlier about the limitations of the private sector solutions in this space, and of course in the scalability. But however, the opportunities are a lot there, and I think I'm following very closely some examples of, for example, e-mobility or e-logistics companies that are incentivizing by partnering with banks and partnering also with development organizations. They are incentivizing their fleet of drivers to move from polluting cars into, let's say, electric cars. And in some cases, for example, in India, there's a number of them of fintech companies and financial institutions that are helping rickshaw drivers to get the capital to purchase electric rickshaw. And I think these are examples of business models that can. It's difficult, obviously, to reach the scale that we need to really make an impact on climate change globally. However, I think that since we are at the early stages of identifying what business models really work, these are good examples on which there's a lot of learning that we can do. And so I think that some of these business models that are emerging, I have to say, I've come across a number in India. I'm sure that actually a number in Bangladesh as well, are being quite effective at promoting that transition. I think my limited knowledge of all the other Asian countries maybe makes it difficult for me to come up with mentioning one top country. But I think that's definitely, I would start by looking at these business models and to what extent they can be replicated. I think that's the key task for us as researchers and a development community at this stage.
Thanks very much, Eduardo. Patrick, Natasha, anything on the regulatory side or even on the product side that you think is a role model that could be copied? Patrick, I see you taking your microphone off. Go ahead.
Yeah, this might be useful, Karen. I was just thinking, because the question was around the business model approach, and for us, even programmatically in terms of our approaches, Terwilliger Center for Innovation in Shelter, it's the innovation arm of Habitat for Humanity. And this is the entity that actually pioneered a partnership with the Asian Development Bank that we talked about earlier. Microbill Fund is being also really managed by this part of the organization as well. And one thing that we've realized over a period of time is, I think Natasha said it well in responding to the earlier question, is one size doesn't fit all. And I think even as we look at this particular region, we've seen the work that TCIS does has actually enabled and strengthened the pursuit of impact for us. And there are specific examples in parts of Asia Pacific, including India, where this business model has actually, we've been able to leverage, and it's worked extremely well for us. So again, I really underscore what Natasha said is, even as we seek solutions, we ought to be careful that the one-size-fits-all model, as tempting as it may not be the most viable solution.
A point I think that we've all made, very often over the course of this discussion. Natasha, anything you wanted to add over there? Anything you're seeing that has worked particularly well?
I will not add to this one. I don't think I think I'm so focused right now in India. I mean, we do work with Women's World Banking and a lot of interesting case studies and examples that come through there, but definitely don't feel in a position to be able to comment on, who might be the best country. I'm just glad to see that there's innovation and, different attempts being made in different countries, right?
Yeah, but you mentioned earlier about the difference between men and women oftentimes in their access to technology. Smartphones was, I think, the example that you used. And I think both Patrick and Eduardo alluded to this, if not said it specifically, the need to be gender smart as well. Are you seeing any sort of particularly good practices in this area, taking this gender aspect really much into consideration?
I can tell you what our experience has been and some of the things we've observed working well in India and have then tried to incorporate into our models. Microfinance itself is such a strong example of a model which really turned aspects of gender-based access on its head and, enabled women to get so much more access. But I think we're trying to, so a lot of the partners that we work with on the ground are actually microfinance institutions. Therefore, I think over 90% of our customers today are women. We're very proud of that. And we also see very particular kind of behaviors because of that among women. Very, strong propensity to save, strong propensity to, repay credit-based EMIs on time. So it's very, very tied into the model that they've seen, say, over the last 20 to 30 years that they've been living in. That said, I think, there's such a long way to go in terms of gender-based access. When it comes to bank account ownership, I think India has made fantastic progress, right? We have the Jan Dhan Yojana scheme here run by the government, which has really expanded access beautifully to a large segments of the population, but men and women. I think there are gaps between men and women though. I think what's interesting is the usage of the bank accounts. And there is where, the gaps really start coming through. And I think, just investments in the public infrastructure to make payment points, cash in, cash out points more easily available, closer to customers, can make a huge difference. I know there is a ton of work going on in India on this, and it's just a call out that we can continue to do that, and those investments are well worth it to address the gender problem, because I do believe women have a tougher time accessing these cash in, cash out points. They are more hesitant to have to travel 5 kilometers away. It's often more expensive for them, also from both a work as well as a childcare point of view, to really access this. I think also smartphone ownership, right? I think huge difference in access, and especially given how much technology can enable today, I think, the more distance we can travel to improve this. I think India is again making fantastic strides in this, right? I think we've got now, upwards of 400 million smartphones owned in India. But when we look at the difference, for example, in our customer bases between, say, North India, South India, between men and women, there are still massive gaps. And I will again, highlight the fact that there was one of the studies we look at carefully had a 31% gap in phone ownership. The smartphone ownership gap was even wider. And I think this translates, right? I think we have to understand that when you first have a smartphone owner, their main usage of the smartphone is actually, or phone ownership is calls, slowly evolves into easy to use apps, chat apps, video apps. I think to do an online transaction, I think we looked at the rural segment out of about 300 million active internet users in the rural segment, and this is not gender-based overall, only about 13% had done an online transaction. Financial transactions, much smaller than that. And so I think we have a long way to go in men and women, but I think along the way we should really see how to either reduce the gap for women, and also, like I mentioned earlier, design products that can incorporate households. Because what we find is that the access to, digital access among households is narrowing much faster, right? You will have either a youngster in the family who will start adopting a smartphone and really be able to now guide, become the assistant on the ground for the woman or even the man of the household very often. And so I think, how do we design products to leverage that, especially when it comes to literacy, education, trust building?
Sure. Thanks, Natasha. A lot of work to be done in that area then. I'm very aware that we're coming up to the bottom of the hour, but I do want to leave the last words with our panelists. So Eduardo and Patrick, very quickly, if I could. We don't want to keep you from your bed. Patrick, I know it's 5:30 in the morning for you. We very much appreciate you spending all this time with us. But Eduardo, Patrick, anything you see as the new thing that you think you see coming up that's going to, really help in this green inclusive finance space? Anything you think, critically needs work on in the next couple of years? Patrick, do you want to go first?
Just a couple of things very quickly. I just, again, want to underscore the earlier point being made, even as we seek solution, just to acknowledge that, one size will not fit all. I think a couple of things that I would say is, for us, we are learning a lot, Karen. And I think the microbill fund has actually helped us to reflect, learn. And even as we look at the next phase of microbill 2, there's a lot that we want to document as far as our journey has been concerned. Understanding, some of the social norms, assess consumer demand, because we just don't want to make certain assumptions that we made when we initially designed microbill, because the world has changed. And we want to identify some pain points, and we want to design products that are based on really the people-centric approach I talked about earlier, making sure it's based on real consumer needs. we also want to make sure that such solutions should be feasible and viable to offer in the long run and sustainable as well. And I'll just close by saying what I said earlier. For us, again, with the bias of looking at it from a housing lens, looking at the housing ecosystem on a broader level, it's important to build partnerships, create platforms for knowledge dissemination and collaboration. And from a Habitat standpoint, we are very open to ideas and concepts that others are willing to share. And similarly, we want to be very proactive as well in pursuing this. So thank you.
Yes, learn indeed. There's no single solution to this. Eduardo?
Yeah, well, as a global think tank, definitely we endorse and are fully in agreement with the importance of learning in this space. There's a lot to learn. We're talking about incredibly complex, multifaceted situation and set of problems. And definitely, I think learning will have to take a center stage at this stage. I think also in addition to that, we'll have to really do some research now. We'll have to identify how do we implement effective targeting in a way that is efficient? How do we increase the affordability of financial services related to climate risks? How do we increase the trust? Because let's not forget, we often think about how do we come up with a solution, but then we don't think about what are the possible consequences of accessing financial services. The idea of responsible finance and the idea of building consumer protection at the get-go in the design of new products, of new solutions, I think is extremely important. That's something we should not forget. Sometimes as an industry, we're too excited to come up with a solution. We get excited about new possible technologies or innovations, and we don't think about the possible negative effects that they can have, especially when the product we're talking about is loans, or even in the context when sensitive data is shared. So I think increasing consumer trust, as well as thinking about consumer protection and how it applies to this type of risks, is something that I think we really need to prioritize going forward.
Yeah, absolutely. No, thank you very much. And I think you pulled it together nicely there, Eduardo. It's about knowing your customers. It's about giving them what they want, how they want it, in a way they need it, and making sure that really nobody is excluded and that we protect them and they can protect themselves ultimately. Well, thank you very much to everybody. With that, I'll say thank you to our panelists today, Patrick Kanagasingam, Habitat for Humanity, Natasha Jithanandani from the India-based Kaleidofin, Eduardo Toletolo, Center for Financial Inclusion. And to you, our audience, thank you very much. With reports that I guess global emissions are at their highest ever, inclusive green finance seems less of a choice and more of an imperative, but with so much engagement on the issue, so much enthusiasm, so much expertise, I'm certain that we're heading in the right direction. Joost, you would agree, I'm sure.
Absolutely, and a very big thank you to you, Karen, for moderating this session so nicely. Great job, everyone. So I'm sure all our attendees have enjoyed this session. However, we want to ask you to give us feedback. So as you recall from previous sessions, if you have attended them, there is a button on the upper right on your screen saying feedback, and it takes only a short moment to give us feedback. You just have to rank us on certain criteria. We would highly appreciate that. I will not try to summarize anything like that. Karen wrapped it up so nicely. Thanks again to our speakers. Thanks everybody to joining today. But we hope this triggered also your interest in joining us tomorrow for the last two roundtables the ADB has prepared for you. So tomorrow at 1 o'clock Manila time, we have roundtable 1, prepping climate resilient infrastructure and green recovery after COVID-19, moderated by our ADB colleague, Director General Bruno Carrasco, and then followed at 4 o'clock Manila time. So there is a break in between session 4, 2:45. Now we have too many sessions. 2:45, roundtable 2, innovating an inclusive and safe green future through policy. And this interesting topic is moderated by Chief Sector Officer Sung Subra of the Sustainable Development and Climate Change Department at the ADB. So tomorrow, 2 experts from ADB moderating, interesting panelists. So please mark them in your calendar or share the news that this is worth your time. Please come tomorrow. And of course, you can also use our hashtag and promote on your social media. So that's it for today. I think we all had an interesting session 2 and 3 and 4, and we're looking to 5 and 6 tomorrow. And I see a lot of thumbs up. Thank you very much. Have a good day. See you soon.